Welcome back, and joining us now on the show is Rishi Nathany. He's Head of Business Development and Marketing at MCX. Rishi, hi, good to have you. You're launching a new product on 13th of December, and this one is going to be nickel options. Options clearly seem to be doing quite well in India. We've seen numbers continue to increase here. Do talk to us about the overall options number and what is the rationale behind pushing in nickel options right now.
So thanks, Manisha, for having me here. The exchange is continuously trying to bring more and more products to the market, and in pursuing this cause, we are also launching the nickel options from 13th of December this year. We've seen a very good traction in our options contracts in the last 1 year. Last year we were doing less than 1,000 crores ADT single side on options. This year it is more or less more than 6,000, and on some days we've seen even as high as 16,000 plus. So we are seeing that options have caught the fancy of investors and hedgers, and that is why we want to bring another option contract which would suit all types of market participants, whether it be investors, traders or hedgers.
Rishi, you talked about the overall market here, and we've seen gold and crude oil options being launched by MCX earlier, and crude oil clearly seems to have done quite well. We've seen record numbers on a day-to-day basis on that. So where is the participation coming in from for these?
So the participation is coming from across the market, whether it's prop or client. End of the day, we are seeing all types of market participants access these contracts in order to hedge their risks and take a view on the market.
Rishi, when we talk about nickel, and the point is that these are European options, European style options that we follow in India. The underlying contract is the futures market here. If you could also give us more contract specifications when it comes to nickel options.
Sure. So the nickel options contract is based on the 1.5 ton nickel futures contracts, and tick size will be 5 paisa and the strike interval will be 20 rupees. The advantage of this option is that the underlying futures today at around 1,540 rupees translates into a contract size of more than 22 lakhs, and the margin again would be around 2.5 lakh rupees. Here a small investor could also access this by buying options at a fraction of that cost.
Rishi, we started with futures when it comes to Indian markets, but since then, as an exchange, you've launched index trading. The sectoral indexes are on. Options has been a great push as well. What can we expect more from the exchange, and how are all these verticals doing right now?
So while it's early days yet for index futures, but we've seen that anything has a gestation period, and index futures have taken off on their own without any liquidity support. It has been a pure organic growth, and we are seeing good numbers on the index futures. We hope that as time progresses, we'll see much more participation on the index futures. Meanwhile, in options also, we launched them few years back, and we have seen suddenly that the options have caught traction. So I believe that everything has a learning curve in terms of the markets understanding the product and gaining acceptance of that product.
All right, Mr. Nathany, Manisha, thanks very much for joining in and for explaining this. With that, we're out of time and halftime report. So do stay tuned in. The team of Business plans to join you next.